Okay, so in this recording, we're going to be refining the trading system that I have a link in below of the finalized with all the refined stats. So at this point, I had already gone through, had an idea through observation, and I had done a rough draft of stats. I put it to paper, built a trade plan, traded it on demo for 1 week, and I had certain situations in the live market that pops up that I need answers to. So this is the point where we're at right now, is the refining portion. So we'll go over the rules real quick of the trade. But first I want to go over what we're looking for here. I want to find out if Friday trading should be excluded. Just leave Fridays alone. A lot of times you have jockeying for position for the week to follow. So that can cause price to not react according to the way that that best benefits our system. Over here I have market open on M1 with large spread. So I ran into a situation where, for example, let's go ahead and pull up my pen here. So I ran into a situation where up in let's see here, it actually opened right in here. We had our weekly target hit, or sorry, our daily target hit, and in the rules, after the daily target is hit, I take it at M2. But the spread was so big, the spread was way up here. Let's change the color and the size of this here real quick. Change it to black. So I got my entry that I wanted because the market moved sideways, and when it goes sideways in, I take it at M2. However, the spread said that I was in fact right in this zone right here, and it never came back far enough to hit my pending order that I had placed in here. So I wanted to kind of refine this a little bit and see the stats to where if I do have this M1 level at market open as we're going sideways into it according to the rules, if I take it even though the spread's up here versus not taking it, and then just deleting my pending order once price comes up here into the profit taking zone. So that's one of them that I want to explore. Moving on to the next one. So a lot of times, especially on early off in the week, we'll hit profit taking zones early. And sometimes they're small profits, so the risk to reward isn't all that great. So I want to explore the idea of skipping the very first take profit zone and gunning for the following days to come profit taking zone. The next item here is moving my stop to break even after higher high versus just jamming my stop. So for a small loss, let's go ahead and take a look at this here real quick. So instead of, let's say my entry is right in this zone right here, instead of moving my stop from below S1 to right below price, once we make a higher high, taking my stop and putting it at break even. So we're going to go ahead and take a look at that as well. See the stats for and against changing those rules. Okay, so also I want to take a look at taking trades with my setup or standing sidelined when price gets near the weekly M2. So if I'm a buyer, and let's say here on the euro, and if I'm buying, I'm buying, and we're near this level here, which is the M2, if I skip, because usually there's bears that are dug in deep at the M2 level. So anything coming up near the M2 level, I will just wait for it to break, and then maybe the next day take, after the M2 breaks, then continue on with my trading. We'll get into that more in detail. I want to take a look at moving my limit to the midpoint instead of M1 after previous day's take profit zone. Okay, so for example, this is a perfect example in here, and this is why I want to explore this a little bit more, is because we had our take profit zone in here, and my entry, in fact, you can still see it on here, I have a pending order for right here. Price actually came down through it, half of the spread went through it and did not trigger my trade. So what I want to do is explore having my pending order maybe just a little bit higher. That way anything that comes through and comes really close to my M2 will trigger my entry. So I want to take a look at the pros and cons of the difference between capturing those trades and missing those trades. Okay, so I also want to take a look at continuing to trade beyond weekly pivots. So if we go through our weekly target zones, a lot of times we come back and we continue on, and I wanted to explore the possibilities of, if it doesn't reverse, continuing on, because maybe we're just heading up to the monthly target zones. So we're going to go ahead and take a look at that. Let's go ahead and get started. First thing, what I want to do is I want to expand this chart because I am using a big screen. I want to make sure that everybody's able to see this here. I want to bring this out to October of 2019. So let's go ahead and go to my indicators list. Let's go to my weekly pivots. Let's make sure that we're going to count enough weeks out to cover that zone. And let's go to my daily pivots, and let's put in at least 350 days. Alright, we'll close that out. Alright, and to get there quicker, okay, here we go. We don't have enough weeks on here. We need to add on a few more weeks. Okay. So we're going to go ahead and start in the beginning of the week. Okay, first of all, I want to say that these trading charts, you can get them in the link below. This is from FX Bootcamp. Wayne McDonald. They're available for $5. You can download them to your MT4. You can download them to your MT5. So shout out to Wayne McDonald at FX Bootcamp. I'm not sponsored by them, just giving credit where credit is due. Okay, so first off, getting started here. Let's go over the trading system, and then we will go through this. Now, what I'm going to also do is I'm going to use this recording, and I'm going to watch the recording and then jot down the stats as they come available. So let's go ahead and move this across here. Okay, in the trading system here, we want to see a bounce off of, sorry, this is a new week right here. So we want to see a bounce off of the M1 level. This is the weekly M1 level. We want to see a bounce off of it, and we're going to be looking at buying because it's easier just to go one direction. It gets really confusing if you're a buyer and a seller. So we're going to do just the bull side of this. So we're going to go through bull markets, we're going to go through bear markets, and see how this works if you're just a bull. On the flip side, if you're a seller, you're going to be looking for the reverse. You're going to be looking for a bounce off of the M2, and then that's going to allow you to start selling. So at this point here, we have not received the confirmation, and once it drops below here, I'm not looking for any trades. At this point here, we do pop above the M2. So what's going to happen here is once we pop above it, then this validates my setup for the next day. Let's go ahead and shade that in. And I would have a pending order just above to cover spread. So we're going to take that into consideration. And we will take a look at if this hit our profit taking zone or if it stopped us out eventually. Okay, so at this point here, I would have my stop loss right down below the S1. We would be entered right in here. So let's go ahead and mark this out here. So our entry is with the spread right here, and my stop is below the S1. This is also what's taught in Wayne McDonald's training course, which I highly suggest you take. It's well worth the money. What I'm doing is I'm taking some of those ideas and I'm applying stats, and I'm coming up with a tailored trading system. So it's partially what I picked up from FX Bootcamp, and I'm tailoring it to my trading. Once we reach this zone in here, which it did not reach my target, it came very, very close. I would have had my target right up here. So one thing I'm looking at doing is either placing my stop loss, jamming it just below, versus putting it at break even. So this is what I'm going to take a look at here. If I took it here and I put my stop at break even, I would have been stopped out over here. If I would have kept my stop just below, I would have never been stopped out. And this would have been good for, according to this, my target is right in here. This would have been good for 82 pips. Now, the way I work my targets, just as a refresher, is if it's a normal size pivot range, like this one right here, my target is going to be the top end of the range, or weekly target zone, whichever one comes first. So this is going to be right up in here is going to be my target. If it's a smaller week, like this one here, I'm going to be gunning for M5. And if it's a really, really small week, I'm going to be gunning for R3, and that's that. Okay, so that's that. I would have been stopped out if I moved my stop to break even. If I kept my stop jammed, I would have been almost stopped out, but eventually in profit. The very next day, whenever price goes into the profit taking zone, I'm gunning for M2 instead of central pivot to place my pending order. So one of the questions I had was, a lot of times it doesn't quite reach the M2, so I want to take a look at instead taking it more at a midpoint. So at this, I would have, if I took it at the midpoint, I would have been stopped out here, and I would have had my stop jammed just below. So that would have been minus 8 pips, because my stop originally was down here. Once we start making higher highs, I jam my stop. If I would have put my stop Eventually at break even, I would have been, minus just a small amount, maybe just spread. So break even. Okay. So now we're entering into a new week. So also keep in mind, this is a Friday trade as well. So if I decide not to trade Fridays, then we'll just omit those as well. Starting a new week, we're looking for a setup. We don't have any setup, so I'm looking for a bounce off the central pivot or a bounce off of the M1. And we don't get the setup until right in, it looks like Wednesday. Wednesday, we get the bounce. What I'm looking for is during the New York or the London or the New York, I'm looking for it to break above, and that is going to be my my trigger to go ahead and start trading. Now, one of the questions that I had for myself was if we're near the M2 or we're getting rejected off the M2, if I'm going to take the previous the next day's trade setup. And this is one of the questions that I want answered. So if I was to front run, because remember, once the market opens, you're going to have a pretty big spread. So during market open here, the spread may be way up here, and I might be reluctant to take the trade. So right before the market closes in New York at like maybe 5 minutes before, you can see that the central pivot's right here. That might be a decent front run to take. So if I were to front run this one at central pivot, then I'm going to be targeting, because this is a little bit smaller of a week, my target is going to be at M5. Now, one of the questions I had also was not taking my targets on the very same day, is to wait for the next day or the next day's target range after that. If I were to do that, if I were to take that same day target, let's say I entry here with spread on a front run, then I would have been up 48 pips. And if I would have waited, then eventually in here would have been my target. So let's go ahead and mark that. If I would have waited, I would have been up 105 pips. Okay, so we're going to go ahead and put that down in our stats as well. Once we hit, in fact, let me go back here. One of the rules is if I come to weekly targets, then I exit. So my entry is here. This is another possible exit, is right in here, because that's my weekly take profit zone. So it's either a weekly take profit or the daily take profits, whichever one comes first. In this case, we would have been up 80 pips. The next day is a Friday. The setup is if we're coming out of a red zone, I'm looking for M2, which we never got, and it's on a Friday. Alright, so the next week we're looking for a bounce off of either the M1 or central pivot. I would consider this a bounce here. I am looking for a break during the London or the New York session to the upside. This I would consider. I want to see a little bit of white in between here, so I don't want to see it just rubbing the pivot and then pulling back. So let's go ahead and mark this. This is during the London session. Okay, I would have taken it right in here according to the system. My stop would have been down here. And it appears that I would have been stopped out on that one. So let's go ahead and mark that stop out with spread down to S1. This is where I would have been stopped out. So we would have been down minus 32 pips on that one. The next day, we're going sideways in, which means that we're taking it at the M2 level or nearby, or kind of like a midway between, because you want to capture it with spread. This would have been my entry, so let's go ahead and mark the setup. This would have been my entry, and I would have been stopped out. Now these are one of the things where I can eventually jam my stop once we make this higher high right in here. I could have jammed my stop, but if I would have taken this and got stopped out full stop, it would have been minus 14 pips. If I would have eventually just jammed my stop, I would have been down 5 pips. Okay, so now this is a setup. Let's go ahead and mark their setups here. Bouncing off of the M1. This was our previous setup here. Bouncing off central pivot. So now we have a new setup. We're bouncing off of M1. So now, even though I got stopped out on these other trades, this looks like what the actual setup for the week is going to be. Once we do get the break of pivot, I can look at re-entering once again, and I'm going to re-enter at the central pivot with my stop right down below S1. And looks like the very next day I'm going to have a take profit, because it is a little bit of a smaller than usual range here. I never reached my M5. The following day I did have a take profit reached, because it's the weekly take profit zone, and we'll go ahead and mark that out. So in the system, you want to see these boxes stepping up from each other. So this is actually step down, and this is something I can take a look at as long as we have the setup. Am I still taking these trades even though it's a step down? So that's something I need to look at further. But as far as what's running into the system right now, no, this is not a trade I would take. Okay, so moving on, we're going into Thursday. Because we reached this red zone, I'm looking for M2. We did not get. And Friday is Friday. There's no trade set up in here. Going into Monday. Okay, here we go, heading into the next week. So I don't have any trade setups on Monday, nothing on Tuesday, but on Wednesday we hit the central pivot. So I'll go ahead and mark that as a trading setup here. All right. And as we come out of the central pivot, I'm looking for it to break above the daily central pivot, but I want to see a little bit of gap in here before I take the trade at central pivot, not just pull right below it. This week, or this day here, is a step down, so I don't trade it. This is all untradeable according to the system. Alright, we have a trading setup right here. We got the bounce off of the weekly M2, so we'll go ahead and mark that out. This is the setup, so now we're given a green light to look for buys. During the London session, we did pop above the daily central pivot, so we'll go ahead and validate this here. Okay, the trade system says to enter right at central pivot. So at spread, we're entering here. We have our stop below the S1, which is down below here. We did not make it higher high, so we don't jam our stops. Let's see here. The next day, we come up here. This is not an exit yet. All right. In the following day, it looks like our take profit zone would be, what size day is this? This is looks like a smaller, so we according to the previous. So I'm going to be looking at taking profit right up here in the M5 zone, which we never got. So if I were to take profit, here, this would have been good for 51 pips. And if I did not, and I ended up jamming my stop, eventually I would have been knocked out way down here, so that would be a break even. So either I took profit here or I broke even. So we'll go ahead and do stats on that as well. The very next day is a trade setup here, and we did take it according to the system, and we got stopped out at S1 for a minus 15 pips. Okay, because price came into the red zone, we're going to be looking at buying at the M2, which we did get, and we probably got stopped out. So remember, we don't buy exactly at M2 because of spread. We want to take it somewhere in here, and we got stopped out for 13 pips, unfortunately. The next week, we didn't get a bounce on the central pivot, so we're looking for a bounce on the M1, which we did get, but it never went above my daily central pivot, so there's no trade there. Price dropped below, there's just no trades. Okay, so next week we have a bounce off of the M2, pops above central pivot, so this is going to be the buy zone here. Just going to mark this out. All right, buy zone here, stop down here with the spread. We get stopped out for minus 28 pips. The next day, we have another buy zone. And this is going to be a stop out as well for minus 14 pips. We drop below the M1, so it's no more buying. Next week, we don't have a trade setup. No trade setup. Following week, possible bounce, never broke above the daily pivot. No trade setup. Following week, we did get a bounce on the central pivot for the setup. No entry point. We're done for the week. We crossed the weekly take profit zone. Next weekly setup. We did get a setup here, a bounce off of the weekly central pivot. So let's go ahead and mark that out. That calls for price to enter into our buy zone. And if it goes sideways into it, we're trying to take it as close to M2 as possible, which we never got the setup. If price goes into the red zone, we're buying at the M2 the next day, which we did get. Okay. And our stop is below the S1. So we got it, let's go ahead and select this here. We probably got it as close to, with spread, we got it as close to M1 as possible. Sorry. If we take the first, if we take the same day profit, it's for plus 59 pips. If we don't and we hold to the weekly tick profit zone is plus 63. And if we hold into an actual next day's profit taking zone, we would be up 97 pips. Okay. Because of the bounce on central pivot, it's a setup. We're going to be looking at buying a dip, so it comes up through the London and New York session, and then we're looking at buying the back end of the central pivot point according to the rules. Okay, so we buy in here with spread. Our stop is down here. Sorry, this is in, well, yes, it is actually this way. Okay. Alright, so we buy in here, and this is a smaller zone, so we're actually going to be going for probably M5, which we did not get. At this point, because we bought in here, once we got into the red here, we probably jammed our stop below this low right here, or we take it to break even. If we jammed our stop, or we would be stopped out for 19 pips, or if we did not and we brought it to break even, we would be at break even. So we'll go ahead and take that in consideration when doing our stats. Next day setup. We'll mark it out here. Okay. All right. As we go sideways in, I want to be taking as close to the M2 as possible. We take it up, don't hit the profit taking zone. I probably raise my stop to jam it at 9 pips, or we place it at break even. So it's either -9 or break even. Following day, because we reached the red, we're trying to take it as close to M2 as possible. And we get stopped out. For -17 pips. All right. So we're looking for another setup. This is a Friday, no setup. All right, we receive our setup right in here. Let's go ahead and mark that out. So now we're looking for buys. Once we pop above, we're buying that central pivot because we have a little bit of the white space in here, so that's valid. With the spread, we're in here. And with the small daily zones here, we're looking for R3. So this is plus 45 pips. If we have a sideways pivot, we're going to be looking at entering in at as close to M2 as possible. Let's go ahead and mark this out. And we most likely got stopped out at -10 pips. Because it bounced here off of the M2 weekly, we still have valid setup. Next day, we have an entry at the central pivot. With the spread, and we're out at R3 plus 50 pips. The following day, because we reached the red zone, we're going to be looking at buying the M2. Is also a Friday, never occurred. Following week, no setup yet, no setup yet, no setup all the way through the week. Following week, looking for a setup, never got a bounce off of the M2 weekly. We did bounce a little bit off of the central, but never popped above the central pivot for the daily. Did get a bounce off the M2, never popped above the central pivot for the London or New York sesh, not valid. Okay, so far no setup until this happened right here. So what we're looking for is for price to pop up above during the New York or the London session and give us a big space, which never really occurred.
Just reiterating that if an agreement is found between
this is a step down,
Democrats, it will take
so we don't take
timing,
any step downs.
Steps that back down towards Trump and Pelosi. Again, just reiteration here from McConnell.
Because we reached the red zone here, we're looking for as close to M2 as possible, which we got. And we're also looking at not trading after a rejection of the M3 weekly. So if we did take the trade, we would have taken a loss. Close to the M2 as possible with spread. Give it some room. Minus 13 pips. Okay. We drop below central pivot, no entries. Next week, got a bounce, never popped above central pivot. Got a bounce, waiting for it to pop above during the New York session or London session. Once we reach the red, we're looking for the next day entry at close to M2 as possible. But the problem here is we're breaching the weekly M2, so no trade there. Next week, got a possible bounce off of M2, never breached the central pivot, drop below. No trade. Next week, possible bounce off of the M2. Never really broke below, above central pivot and just kept going. A lot of these losses is because the time frame that we are testing is during a bear market. So it's really hard to be a bull during a bear market. But we're taking a look at worst case scenario. Now, this all is COVID. This is a black swan. So, whenever you have a black swan event or a shock to the market, like Fed announcing they're going to raise or lower interest rates, turn systems off. So wait for the market to flush out. So we're going to go ahead and skip forward till like around April or May. Because this is all stimulus. Okay. Let's go ahead and go into the last week of March when the market starts to flush itself out and you can see the response. You got the bounce off of the M2 weekly. price pulls above during the New York or London session, and your entry is right here. Let's go ahead and mark this out. Okay, once you get your entry, you're looking for a target up in here. You never received it. At this point, you probably cinched up your stop to here or here. And looking for a target the next day, never received the following day, because this is a little bit of a smaller daily range here. You're probably looking for the M5. So let's go ahead and take our profit from the central pivot with spread up to the M5. This is plus 291 pips. The next day, you never have an entry here. This calls for an M2 entry, which you got on this wick right here. Alright, so you're probably in around here with spread, and your exit is the M5, so this is a plus 249 pips. We'll go ahead and mark that down. Okay, coming into Thursday, you never have a trade setup, and we're discussing whether or not we're going to trade Fridays or not. If you did, you would have gotten an entry close to the M2. You would have raised your stop to just below the M2 or break even once this happened, once we reached up in here. If you did get stopped out with just jamming your stop, then you would have gotten stopped out for 18 pips. Next week, we did get a bounce off central pivot, but I do want to see the price action go up through the pivot during the New York session or the London session, so I would prefer it to look something a little bit more like this instead of this. Okay. We're looking for a bounce here at the M2, never received it. Looking for a bounce at the M2. Got the bounce at M2. No entry during the New York and London session. This red right here calls for an M2 entry. So it goes into the red, so we're looking for near the M2. We'll go ahead and take it with spread right around here. More of like a medium size, so M5 is more than likely our target. And that's good for 105 pips. The next day, as we go sideways into the next zone, we're looking for the M2. Let's go ahead and mark that out. Alright, so we take it as close to the M2. We want to take spread as well. We're going for the same target, and that's good for 99 pips. Coming into Friday, we don't have any trade set up. Okay. As far as I'm concerned at this point here, there's just no trade setup. Yes, you can possibly count this as a bounce off of the weekly central pivot. However, we never breached the central pivot on the daily, and also we never had the breach during the London or the New York, going up this way then down. So that's an invalid trade setup. No trade setups yet. Possibly one here, just never panned out. Next week. Okay, so we do have the bounce off of the M2. During the London comes up above central. We take it at the central pivot, so this is valid. Okay. Well, all right, and our stop is down below S1, which more than likely we got stopped out. The spread down to S1 minus 40 pips. The next day we go in sideways, so we want to take it as close to the M2 as possible. And we got it, and we got stopped out for minus 23 pips. Okay, so we drop below the M2 next week. All right, so here's our bullish setup. Go ahead and mark that out. All right, and as we get the bullish setup, we come into sideways into our range. We're looking at buying at M2. Okay, so we buy at M2. Again, our stop is down here. Once we reach in here, again, our profit target, if we were to take the first profit in that same day, would be up here, never reached. You probably moved up your stop to just below this, but it never reached the stop. If you did move it to break even, you got stopped out at break even once price came down here. The next day never reached profit taking zone. The next day you reach profit taking zone right up in here where the weekly take profit is, really close to where the M5 is, so that's plus 114 pips. The next day after that, you got another entry here. Because this is in the first hour of the trading session, your spread is probably up in here, so we'll go ahead and account for that. If you enter it in here, your spread's up in here, and you got your profit on this one for 114 pips. The very next day, you're taking at central pivot. Alright, your stop is down below the S level. Take it at central pivot with spread. We got it in somewhere around here. And our exit is the weekly take profit zone, good for 80 pips. Next day is a Friday. Friday, and we already reached our take profit zone for the week. Coming into the new week, we did get a little bit of a bounce off of the M2, never broke above central pivot, dropped below, no trade. The week after, we did get a bounce off of the M2 weekly. Just go ahead and mark that out. This is our trade setup. Never got any daylight within these candles. I'd rather it come up. Let's go ahead and draw that out. So once we break above central pivot, I'd rather for price to come back and then test and then go on, and not just hang out at central pivot. If it once it came up here, it would have been nice for it to come back and test, and then we would have been able to take it. But since we reached the red zone here, we're looking for the M2 for the next day. Here's our M2. And we got stopped out, so we got as close to M2 as possible with spread, some room to run. And we got stopped out for minus 33 pips. All right. Price drops below, comes right back in. At this point, I don't really have any trading setups. But the next day, the next week, we did get the trading set up at the M2 level. We'll go ahead and mark that out. Never had an entry. This red right here, actually after we reached the take profit, that there's no more trade setups for the week. We did have a question on the that if we were to keep trading after it reaches the weekly take profit zone, if we were to keep trading at that point, more than likely we would have taken this trade in here, never reached our take profit zone, got stopped out at break even. If we were to take this one here, we would have been in close to the M2, probably got stopped out, probably would have got taken a full stop on that one. So maybe not a wise idea to be trading after we reach the weekly take profit zone. Okay. So the following week, we breached the central pivot. I didn't have any trade setups in here. Once we breached the red, we're looking forward to buying the M2, which we got. So we'll go ahead and mark that out. This breach of the central pivot is bullish. We come down, we get as close to the M2 because once we reach this red, we're going to be looking at the next day's M2, which we got. Go ahead and mark that out. And with spread, we probably got in somewhere around here. Never reached the take profit zone. Next day after that, we did reach the take profit zone, and it was perfectly within our weekly take profit. This is good for 140 pips. 140 pips. The following day, didn't quite reach our entry. Just came above our entry by price. We're done trading for the rest of the week. Following week comes in high, just no setups. And it's done after it's reached the weekly take profit zone. Next week, we did get a trade signal right inside here. So we're looking for, once we reach the red, we're looking for the M2, which we did not get. Once we reach the red here, we're looking for the M2, which we did get and finally got stopped out. So let's go ahead and mark this. This is negative 32 pips. The next day is a step down, and on Friday, and we don't take it.
Check central bank addenda. It says currently at the minutes there's no need to cut rates further.
Okay, we have a continuation here. On to next week. We got the bounce off of the M2 here, so I'll go ahead and mark that off. Alright, so this is our trade setup. And we're gonna, since we pulled above the central pivot, we're gonna be buying on the central pivot. A couple of things I want to clear out here is, okay, so with the spread, if I bought it here, my stop would be down to S1. If I were to move my stop to break even, it would have been a break even trade. If I moved my stop below the low, then it would have been minus 50 pips. Okay, next day, it's going to be a buy at central pivot. That is going to be a stop out. So with spread, stop out of minus 46 pips. We have no more setup. No more setup. Going into the next week, we have a setup here. Bounce off of the M2. And through the London and New York sesh, we get our trade. So it comes through, retest the top end of the central pivot. My stop is going to be below S1. Once it moves higher, I either move my stop to below this lowest low or to break even. Did not reach my first target. However, the very next day, reached the second target. So this is a plus 128 pips. Okay. Because we reached the red zone here, we're looking for a buy at the M2. Never occurred. Because we reached the red zone up in here, we're looking for a buy at M2. Okay, so this would have been a stop out of 36 pips. Okay. Very next day, we're looking for a bounce off central pivot. Never received it. Moving on. Alright, never received a trade setup yet on Monday. Price moved all the way down, bouncing off central pivot. Now this right here is a possible trade setup. So we'll go ahead and mark it out. This is the M2 weekly. However, it never pulled above central pivot with the large enough white zone between the candles. The very next day, we didn't get the pull above central pivot until in the New York session. Never came back to enter. The very next day is a step up, so you buy at the central pivot. Let's go ahead and mark that out. Okay, so this one's going to be up by a central pivot with a stop below the S1. With spread, never reached target the next day. Okay, this is a super inside day right here, so my target wouldn't be until the following day. This is just completely invalidated because it's just such a small range. So I take the weekly target or the following day's daily target. So if I was to take the weekly, that's plus 91. You have the bullish setup opening on central pivot and moving above. Came all the way to weekly target zone. Next week we have a setup, open and bounce off of the central pivot. Because we hit the red zone here, we're looking for a buy near the M2. We'll go ahead and mark that out. Okay. So what I'm looking for is a take profit either at the weekly zone or at a daily take profit zone. If I was to take profit at the weekly zone, this would have been a plus 69 pips. If I was looking at the daily take profit zone, we wouldn't have gotten it until way down the line. At 171 pips. Because we reached weekly take profit zone, don't take any more trades next week. Alright, next week We have a setup on the bounce of the central pivot. We'll mark that out. Came into the next day. Take the trade on the central pivot. Go ahead and mark this out. Central pivot, we either take a profit at the R3 or at the weekly take profit zone, so we'll go ahead and mark that out. So either we're out at 77 pips or 95 pips. Next day, because we reached the weekly take profit zone, usually I stop trading. Following week, we get a bounce off of the weekly M2, and we'll go ahead and mark that out. Okay, so we have our valid setup, bounce off of the M2. We never pulled above the central pivot, so the following day we do get, let's see here, we do get price pulling above during the New York session. This is kind of tricky now because we never pulled down and then above central pivot until this area right here, and never really got our entry. I'm looking for it to bounce and then enter. Following day, never got a setup because we reached the red in here. The following day, we're looking for an M2 setup, which we did get. And we did get stopped out. Go ahead and mark that. So either at this point you moved your stop to just below here once price moved above, or you kept your stop at below S1. So we'll go ahead and take first. If we moved our stop, it would be for minus 20. If we did not, it would be minus 36 pips. Okay, continuing on here. We're looking for a bounce off of the M2 weekly, which we did get. We never pulled above central pivot. Still looking for the bounce and pull above central pivot, which we did get in here. So we'll go ahead and mark the setup. This is the setup. Okay, and we did get the buy option right in here. And we had our stop below the S1, which we most likely got stopped out by the pip here, which is minus 50 pips. Okay, so the next day we did get the price come down and then back up again, so we did get an entry. We'll go ahead and mark that out. So we did get an entry here, and we'll take a look at take profit. Okay, with spread, got it in here. Never took profit here. Never took profit here. Still waiting. So we'll either move stop below this low or move stop to break even. Never reached our stop. Still waiting. Still waiting. The inside day here, we're taking profits either at weekly take profit zone, which is at 166 pips, or we're going to take it at the R3, which is 182 pips profit. Moving into Thursday, because we reached the red, we're looking for an M2, never received it. Moving on. Alright. So sometimes we have a front run from the week before. We can count this as a trade setup. Okay. So we're looking for the pull above the central pivot, which we did get. Go ahead and mark that out. So we take the trade right here. and we have our stop below the S1. Price never really made a higher high, still waiting, still waiting. We did take profits. So this is a regular, let's see here. It's a regular sized day, so we're going to most likely take profit right here at plus 66 pips. Following day, we go in sideways. So we take the entry either at the open with spread, or we take it closer to the M2. So we'll go ahead and do both of these stats here, because this is what we're looking at, clarifying. So with spread, we would have been up here. Our stop would have been below S1. We would have been really close to getting stopped out. So my take profit would have been 82 pips. Or if we were to take it closer to the M2, because we went in sideways, we would have taken profit at plus 89 pips. Okay, so we did get a bounce up, and our entry at this point would have been at the central pivot point, which this would have been the stop out. So we'll go ahead and take the stop out. Okay, so right in here, and the stop out is below S1, so this is minus 27 pips. Okay. We did get the bounce once again off of M2. So taking that the central pivot once again as we pull back above, with our stop being below the S1. We got a take profit of 54 pips. Because we reached the target zone the next day, we're taking an entry at M2, which we never got, and also being a Friday. Following week, waiting for the setup, never received it. Waiting for a bounce at central pivot, never received it. Waiting for a bounce at M2, which we sort of got, but we're looking for it to then pull back above central pivot, which we did not get. Never received any trade setups. Following week, looking for a bounce off of M2, never received it. Still waiting, still waiting, still waiting. Okay. We did pull back above eventually. Price went into the red zone here, so we're looking for a market open at M2. If we did get the market open on a Friday, I must say. Okay, so if we did get the market open on a Friday, yeah, we probably got in somewhere in here with the spread, and my stop would have been below S1. Eventually moved it up to below the lowest low, or at break even point. If we were to take a stop below the low, we would have been at minus 12. Okay, following week. Alright, following week, we did get the markets open and show bullishness above the central pivot point, so we'll go ahead and mark that. Alright, so we're looking for our trade setup. Following day, pretty darn close to the red zone. Let's see here. Either I take it at central pivot because we did not reach the red zone, or because we were so close I did take it at the M2. So we'll go ahead and take out both stops here and take a look. So my entry would have been here. Either I jam my stop just below here at minus 71, or I kept it below S1, which is minus 32. If I did take it closer to the M2, then my stop would have been minus 22 pips. Following day, we entered sideways in. So we take it close to the M2. Either we take it at market open with the big spread, or we wait. We'll go ahead and mark both of those out. With the spread, it would have been probably somewhere up in here. A stop out would have been minus 31 pips, or if we took it closer to the M2, stop out would have been minus 25 pips. Okay. Still waiting for a setup. Price pulls back above the weekly M2. Following day, looking for a bounce off of M2 weekly on the following week. Never received it. Price drops, drops, drops. Okay, following week, let's go ahead and delete this out here. This is for my old back testing. Alright, so this is a setup here. We did receive a bounce off of the M2 weekly. Price did move above. May have not entered my trade because there is a small gap between pivot and where price came down to. Okay, no trade zone. This is a trade zone here. Price never reached because we entered the red zone here. We're taking a long at M2, so we'll go ahead and mark that out. So we're going to get as close to M2 with spread and a little bit of room here. If I were to have a super tight stop, I would have been stopped out at minus 23 pips. If I were to allow a little bit of distance, which I normally do, we would have been okay. Let's see here, price moves up. I may have jammed my stop. Oh, well, no, I would have kept my stop still below here. I still would have been in. Reached my target because this is a smaller day. My target, and not a real small day, so my target probably would have been at plus 74 pips. Following day, it's a step up. We still have a valid trade scenario setup, so we do take it at the central pivot point. Okay, so we take it at central pivot point. If I did jam my stop just below my entry, I would have eventually been stopped out at minus 6 pips. If I kept my stop below S1 until we made a significant move, I still would have been in the trade. Let's see here. So we did get our take profit at plus 61 pips on that trade. The following day, because we went sideways in, we're taking our trade at M2. This is a Friday, keep in mind. Still trying to determine if I'm going to trade on Fridays or not. This would have been stop out for minus 20 pips. Following week, alright, so following week, I have this too far away from central pivot to declare a trade setup. Even if I did, we never really got the move through the London or to the New York session, and even if it was, this is still probably would have not hit my entry, so we're going to skip that. Okay, so because we reached the red zone here, and if you count this area as a open at the central pivot, and we got the large move up, and we reached the red zone here, you're looking for a trade at the M2. So if you were to, if I was to take this trade, take the trade at M2. My stop would have been down below S1, which it would have been safe. Let's see here. Price comes up, and because it's a slightly smaller day here, I'm looking for a target at M5, and it's a weekly take profit zone, so this is plus 70 pips. Alright, this is a step down, so it's a not valid trade setup. Alright, so this is a sideways step here, so you're taking an entry more than likely at M2. Okay, so I want to show you the difference here between these two. Okay, so this box here is an actual step down from the previous box. Everything's lower, central pivot's lower, the M2 is lower. This box here is a sideways box. We did get the trade set up way back here, so it's still valid. We're going to be taking a trade because it's a sideways box at the M2 level. If I did have a pivot that was higher than the previous pivot, then I would have taken it at the central pivot. Instead, it's going to be an M2 trade. Never reached my stop. Price moves up, hits the weekly and the M5, so there's a plus 71 pip trade. On Friday, if we were to take Friday's trade, we did get the valid setup, and this is a higher box, so we're taking it at the daily central pivot. And this is also good for plus 58 pips at M5 and weekly take profit zone. Alright, following week, price did come down and gave us a possible trade setup at central pivot with the bounce. I'm looking for it to pull back above central pivot, which we did get here, and more than likely I took a stop out on this one. So down to S1, so this is minus 30 pips. Following day, more than likely took this trade here at the top of central pivot. This too would have been a stop out of minus 21 pips. Next day, no trade setup, no trade setup, no trade setup. Okay, we did receive a trade setup on the next week here. No entry. I'm looking for it to curl back over and hit my central pivot. No entry. Because we reached red here, I'm looking for the M2. Never received it. We hit the weekly targets, so according to my system, I don't trade it. But if I were to continue trading, because we reached the red zone here, I'm looking for the M2. Never received it. Concludes my stats left outstanding. What I'm going to go ahead and do now is watch all the videos and mark down all the categories and the different setups or the different variables, and we'll come out with the best stats. I'll be right back. Okay, so all the back testing is over, and I went ahead and reviewed all my videos, and I answered all the questions that I needed to have answered, and I got stats for everything. And this is why I determined, am I going to take Friday trade setups? And the answer on that one is no, I'm not going to take any Friday trade setups. Okay, so if the market opens at M2 with a large spread versus pending, if I was just to place the pending order at M2, will I take it? And the answer is yes, I will take it. And another question that I had was, if I skip the first take profit zone, I just didn't have enough data on there, and I may go back for several years. I only had, I believe, like 2 situations of that, and it was slightly positive. If I was to skip the first that same day's take profit zone, so I may go back a few years. Actually, I will go back a few years, and I'll come up with stats for that. But as far as right now goes, I am going to take the take profit at same day take profit zone. Okay, so the next question that I need to have answered was if I was to move stop to the break even after a higher high, or if I was just to simply jam my stop, and the stats show that I am much better off if I just jam my stop. Many times If I had moved my stop to break even, I would have been stopped out and the trade only to continue to the take profit zone. Okay, so if I was to take trades near, now this one here I kind of forgot about when I was doing my back testing, which is unsatisfactory. I'm a little bit upset with myself, so I did went back and I reviewed them, and the answer is yes, not a problem. Take them at M3. If I have the trade setups at M2 or central pivot, then I am continuing on that trend. Okay, so am I going to move my limit to the mid? So basically, like if we have if price reached the red zone and I'm going to take the M2, am I going to get it close, like really close to the M2, or if I'm going to have it more of a midpoint? And the answer is I'm going to take it near the midpoints, because more often than not, price doesn't go all the way down to M2. So I do want to lift it up just a little bit and take those trades. Okay, the next question I wanted to answer was, am I going to continue to trade beyond the weekly targets? So what I noticed in the back testing is if we pull up to the weekly target and we start moving down, then trades off. We're down in a consolidation or a downtrend. But there was one situation where we did have an inside weekly trade pivots, and price continued beyond the take profit zone in the stair-stepping formation, and so I was to continue in that situation. I would continue trading beyond that. So those aren't included in the stats. I actually did not include those in my overall stats I have listed here below, but here we go. In my stats, I have total of 29 wins. The total pips from those wins are 2,935. The average win was for 101 pips. My total losses is 25. My total pips lost in that within that grouping is minus 628. My average loss is so this is nice. It's minus 25. So that's actually my win to loss ratio is 4-to-1. Sorry, my risk to reward ratio is 4-to-1, so that's really nice to see. So the win to loss percentage is also really nice to see, especially when I have a 4-to-1 risk to reward. My wins are at 53.7%, while my losses are at 46.3%. So that's really nice to see. 53.7% of the time I gain 101 pips, and 46.3% of the time I lose 25 pips. So the total pips at the end, with the wins and losses, is plus 2,307, and my average pips every time, no matter win or lose, if I have a trade set up and I take the trade according to the rules, I'm at plus 42.7. So that's in the back testing. Of course, things get a little bit different whenever you do forward testing. That's why I am going to be doing it on demo. But with making these rules and going over and having hard rules, it makes it to where you're pretty much whenever you go live trading, you know the time frames that you're looking for. You're looking for a setup in the New York or London session, or you're placing your pending orders. You know where to place the pending orders. So I do imagine over the course of several months that I should probably have results that are similar to these right here, but that's going to be seen in the demo trading. So we're going to take it there. I'll update you if anything else further occurs. Thank you.